All right. We are back with another episode of the Real Estate Investing Club. Hope you guys are having a good day, whatever day it is for you. As always, it's Friday here, always bringing that Friday energy to you. It is still the 21st, so we are at the end of February, heading into spring. Super excited to it. Yeah, hopefully we start to see some sun around here in Seattle. We've been these are the long months. If you guys ever come to Seattle, just know that the best time is June and afterwards. It is very difficult with all the all the clouds we get, but we are definitely coming around the bend, and I'm looking forward to some sun. It's a good day for a second reason, though, because we have Mark Helm with us on the podcast. Mark is from Q2 Self Storage. He has tons of experience in the self storage niche, which, as you guys know, is one of my favorites. I love buying self storage facilities. So I'm sure Mark has a lot of experience and a lot of wisdom to give us in that topic. So, Mark, thanks for hopping on.
Hey, great to be here, Gabriel. Just love it. Love your podcast.
Absolutely. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. Sounds like you have a long story. It started in the 90s, so you have quite a bit of experience. Why don't you take us to the beginning of your story in real estate and tell us how you got here?
Well, my entry into self-storage in particular started as a real estate agent. I've been a licensed real estate agent since May 1, 1985.
Oh, wow.
And once I got my CCIM designation, which took something back in the 80s and 90s, a lot of travel, is about, I don't know, $8,000 a letter is what it used to cost me back then.
Wow.
But I got that designation in 95. And within 2 weeks of getting that, I got a phone call from an acquisition director of a REIT in the self-storage space back then, asking me to help. Can I help them find self-storage in my market area? And when you ask a agent if they can help you find property, there's usually only one answer. And the answer is yes. So I quickly started studying the space, but I met with this acquisition director and we went out and started looking at self-storage. Now, at the time, I'm coat and tie guy, selling office buildings, had a management company. We managed office buildings in our market. And I was used to, income minus operating expenses, net operating income. But you had to have a lot of capital money in the office business or access to it that was all under the net operating income line. So we would do a good job, but there'd be years where we had brought the NOI up, but the owner had to pony money in at the end of the year because of all the capital expenses and commissions.
Mm.
So I took this acquisition director out, and I thought storage was a silly little business for silly people. And it didn't take me long to see what it was. I mean, basically, it's a steel building and a concrete floor. I also had brokered a lot of flex space at the time, and we were getting about 350 a foot in the flex space area at the time. And for self storage, literally the same building, just had a few more roll up doors. They were getting $9 and $10 a square foot, and there were no commissions, there was no capital improvements, there was no toilets there, and it didn't take me long to see what storage really was. So I tried to figure out how can a guy like me get in that business because I didn't want to be in the office business. I loved managing it and leasing it. So anyway, that's how I got in. It took me a few years to figure out how to get in it, but I got in. I closed on my first storage deal December 31, 1999.
Oh, wow.
And over the years, I've created three brands, did a portfolio real quick in the early 2000s and sold that, and then went back to brokerage. And then about 2007, 8, I got back in it and built a few brands over and then sold those in the past few years. And 19 to 21 sold those two brands and now doing still out there, although smaller levels, still banging in the storage space, and I love it.
Nice. I love it. Yes, self-storage is one of my favorite assets to buy. I buy mobile home parks, RV parks, and self-storage, and
Yeah.
self-storage is one of my favorites. So there's a lot to get into. I mean, you have a ton of experience, and so there's a lot of wisdom that I'm sure we can get from you. Um, why don't we just start with, it all starts with finding deals and getting in, getting the property under contract. So why don't we start there, have that be our starting point? How do you go out and find new deals to buy? What's your favorite way to acquire properties? Do you prefer building over buying? Tell us kind of how you find your deals first.
Good question. Well, I will say that I am still relate to myself as a small investor.
Mm,
I don't run a fund. I syndicate, but I still relate to myself as a small investor. So I'm not out here with $50 million. I got to roll into the self storage space and doing mega 15, $20 million projects at once, which is what's happening.
mm.
There's a lot of that going on. So my bread and butter has been buying mom and pop facilities. 10 years ago, REITs took up about 20% of the space, and the vast majority of all the self-storage facilities were owned by somebody who just owned one. Today, REITs account for what, 33% of the space, but there's still a ton of mom and pop projects out there. So
Yeah, I
that's
think I
tends
saw we actually just had somebody on the show who does self-storage as well, and we were talking about the same topic. And I put out the number that 50 I think it was 55% is what I saw of mom and pop owners.
mhm.
And I think that is, you're right. I think it's like 30-ish% is REITs, and then there is like 20-ish% of small or medium size owners, people who own, 2 to 10 or 2 to 6 or what, I can't remember what their actual
Mhm.
designation is, but a number like you, I'm sure would be considered a medium size, not a REIT, but not small. You're a medium
Yeah,
size
more of a
owner.
regional player, right?
Yeah, yeah. And then everybody else, 50%, they own 1 to 2 properties, which is pretty crazy.
Right. It is. It is. So the industry's consolidating still, and that's where there's a lot of opportunity for guys like us because we can basically buy a mom and pop property, create, turn it around, make it quote institutional, and then sell it to them because they pay top dollar. Their cost of capital is lower. So our bread and butter has been buying mom and pop facilities. I'll make it up, 25,000 square feet. Basically, you fix those up, manage them like a business, which many mom and pops don't do. And then let's say we add another 25,000 square feet, bring it up to 50, run it for a few years, and then you now have an institutional grade asset that people will pay top dollar for. The other thing that I've done a lot of that I love is buying existing buildings and converting them to self storage
Hmm.
because it's usually, conversions, usually climate control. Very often we can buy buildings where if as long as I've got 17 to 18 foot clear height space, I can put 2 floors in a building. And I love buying buildings where I can go up a level and basically buy square feet and convert it to cubic foot income. So I probably made more money doing conversions profit wise than anything we've ever done. I've done
Interesting.
a few ground up developments. Those still do them, but I like expansions and conversions better because they're quicker. I've got cash flow coming in usually from the very beginning. Even on conversions, I can lease part of the building out while I'm converting the other part. So I just really like that.
Yeah, no, that makes a lot of sense. So let's talk about conversions. That's something I have not done, is dabbled in converting something to self-storage. I'm sure your criteria is pretty specific when you're looking for a convertible building. What is it like? Where do you look in terms of the metro? What type of building are you looking for? Is there a certain brand that like a Kmart that went out of business that you tend to find, or give us a little bit more detail on the criteria of a building that you look for when you're looking for a conversion?
Well, given that this industry has really become pretty sophisticated over the past few years, past decade, but last 5 years in particular. Um, Location is everything at this point for self-storage. If you're just doing self-storage and there's no boat and RV, which is another whole um, um, sub subtopic to talk about. But if you're doing self-storage, it is a retail business. So I want to be as much as possible in a retail location. I still like visibility. Um, in the storage business, our average customer lives 3.2 miles from our facility. So I hopefully want to be in a location where, let's say, 100%, 80% of my market area sees us, even though only 10% are going to need our services at any given moment. So I want to be seen. That's kind of the main thing. So that's what I'm looking for more than anything.
So you're looking for
Sometimes,
road frontage, and you want to be within a denser population area. Could be suburban, but you want to have houses around you.
yeah, exactly. I want to have I want to be seen by my market area. A lot of people say, well, with the internet, visibility is not as important. Maybe it isn't. I don't want to win that argument. I just want to buy property that my people, our market area, trade area can see us. So that's the most important. That's what I look for more than anything. Then you got to look for is what's the supply demand in that trade area.
Mm.
What's going on in the city's interesting. What's going on in the country's interesting. What's going on in that trade areas, everything. What are the rents and what are what's the supply demand?
Do
With
you look for a certain net rentable square foot per capita, or what is it that you look for in terms of supply and demand?
Well, I look at it. I've got to know it. In the old days, 10 years ago, I live and died by the square foot per capita. If it was over 8 or 10, I wouldn't do it. But today, I look at that because the bank's going to want to know, and I got to be able to tell them. But what I'm really looking for is that compared to the rents.
Mm.
Um, and so 10 years ago, I would have a business plan on the brands we just recently sold. We want to develop in the Southeast. Why? Well, because of migration. But when it was costing me $50 a square foot to build, single story institutional grade self storage and interest rates were 4%, I could move pretty almost anywhere in the Southeast and it'd be fine. Today, with the cost of construction and with interest rates, I pretty well got to be in an area where I'm getting $100 or 90, 100, 110 for a 10 by 10, or I can't afford to do that construction. So now rather than chasing area, I'm chasing rates. I'm
Mm.
looking for what are the rates and what is the supply demand in that area. So it's just a different world today. And that's kind of what's driving our acquisition criteria or our buy box, as you might call it.
Do you have a specific tool that you like to use for kind of metro analysis? Do you is there any data tool that you like?
Right now, I'm using Radius Plus. I've
Yep.
used different ones in the past, but we have a subscription to Radius Plus and really like it, use it. Now, I'm not going to make a ultimate decision on it. What Radius Plus does is allow me to know what whether to focus on that trade area or not. I always, if I'm bringing on 1 square foot of self storage, I will always get a feasibility report during the due diligence period. Period. I want somebody that doesn't have a dog in the fight to actually analyze that trade area and tell us and project out what's going to happen and give us. And I usually pay for the full ones. I want to know, what are the barriers of entry, and we get detailed feasibility reports before we pull the trigger. But I always start with something like Radius Plus.
All right, that makes sense. Okay, so you like to look at the larger metros, it sounds like, and you want to be seen. You want to be on those main drags. Do you guys look for off market properties, or do you are you primarily going through brokers?
Um, Mostly I've gone through brokers. I haven't set up a lot of infrastructure for off-market properties, although I am starting to get in a few deals with people who have infrastructure for finding off-market properties. Now, today I like being in obviously large metros, but I mean, I don't necessarily want a rural project, but I'll be in smaller markets. I'll be in if you think of Houston, I'll be within the Houston MSA, but let's say the third,
Ring
express
outsider,
ring
tertiary
around it.
market. Yeah.
Yeah, exactly. That's where we're finding most of the opportunities today, as
Mm,
opposed to like downtown Houston, for
yeah.
example.
Yeah, my best deal that I bought, it was two really small facilities. They were like a little over 10,000 square feet, but they were outside of Dallas, just outside of Dallas, and I got them for a steal. And to date, in terms of just the return, those are my those are my best facilities. These two little guys, but they were just outside of Dallas, mom and pop. They weren't even on Google. All they had was a number on the side of the facility. And yeah, those are the killer ones, the ones you
Yeah,
don't really
exactly. That's
expect.
where we're finding the opportunities. And I'm running and I'm chasing rates and today as opposed to areas. And you're exactly right. That's where we think the opportunities are as well.
So in terms of size, you've mentioned 25,000 square feet. That's kind of like what you're playing at. Do you go lower? Do you go to like 10,000? Or obviously you'd go higher if it was a good deal. But what's the square footage that you generally look for the property?
Well, my ultimate goal is to have something. It doesn't have to be 50,000 today, but to have something that an institutional buyer or a fund would look at. So I have bought as low as 10,000, but we're adding more space. We've
Mm,
got one right now in Salt Lake area. I bought, I think it was 10,000, right at 10,000 square feet. But we're building a two-story climate control expansion
mm.
on adding another 26,000 square feet of climate control to it.
That'll do it. That'll change the numbers for sure.
Yeah.
So in terms of construction, what do you see? I mean, right now with interest rates, it's pretty difficult. So what do you see for the future? Is when you're looking projecting yourself out 5 years, what do you think the strategy will be for acquiring properties?
Well, it's hard to project out 5 years. So what what I'm finding is the biggest challenge right now is construction cost.
Mm,
Our as a developer, I used to do all the construction myself as an owner because it's I wouldn't build a shopping center or an office building, but I could certainly build single story or two-story fabricated self storage. But lenders today are requiring GCs. So what was costing me in 2019 or 2018 $50 a square foot to build, when I sent it out to bid with GCs, it was coming back 110, 130 bucks a foot. And that just killed the deals, couldn't do them. So, like most entrepreneurs, I solved my own problem by creating another company. So, we've created a small construction company I brought in GC as a partner. And what I was building for $50 a square foot a few years ago, I'm now able to build in the 75-ish, 80-ish dollar a square foot. So that's how we're addressing construction costs today. So the one thing that's going to be, regardless of your political beliefs, the one thing that's like in place right now for the next few years is uncertainty.
mm.
Tariffs, tariffs on steel, tariffs on our neighbors. So the uncertainty is going to be the one thing that's in place. And what happens when, especially institutional buyers, are uncertain? They tend to move to the sidelines. So I think for small investors, there could be some real opportunities in the next couple of years. But you've got to be able to buy right, you've got to be able to build right, and you've got to be able to anticipate enough rent to cover, if it costs me $75 a square foot, it's 7,500 to build that 10 by 10 plus my land cost. I've got to be able to get rent to get a return on that $7,500 for that 10 by 10. So I can't be in markets where it's $65 a month.
Yeah. Yep. Makes sense. All right, we are running down the clock, so I'm gonna have to move us along. Before we do, though, I always like to ask for people with a niche such as yourself. You're a self storage master. For anybody out there who wants to get into self storage, what is your advice to them?
It's a business now. It's not just a real estate play. It's like building a shopping center and then running the store in the center. So you got to run your self storage like a business. And if you don't want to figure out what the self storage business is, partner with somebody who does, or hire a third party management company to run it.
There you go. All right, I'm going to take that opportunity to push us into the quick question round. Are you ready?
Yep.
Let's do it. Starts with education. It could be any form. It could be a conference you've gone to, a mentorship program you've been a part of, book you've read, movie you've seen, anything. But I need two recommendations, one for general life wisdom and then one for real estate.
Well, every morning I read a book called The Science of Getting Rich. I don't know if you've ever heard of it, but I read a little chapter. It was written in 1910 by Wallace Wattles, long before Think and Grow Rich ever was done. And I read that book every day. It gets my mindset correctly, and it allows me to put my attention on, help me keep my attention on what's important. And then I love going to storage conventions. I just love every bit of it. There's the storage space has basically a non-for-profit, the Self Storage Association has conventions every year, and then inside self storage. And I particularly like the inside self storage. So there's not a convention, not a year I miss a convention. Keep up.
Nice. I will have to. I've gone a few times. I'm not 100%. I have. There have been a few years that I've missed, but I've gone a number of times. And so next time, maybe I'll have to meet up with you, and we'll have to grab a drink or something.
Yeah, for sure. I'll be speaking in April at the ISS, and anyway, I like the ISS.
There you go. All right. Next question is for your younger self. So let's go back to the Mark back in. I think you said 19. What'd you say? 1985.
When I got my license.
Yeah, when you first got your license,
Yeah, I
go
was
back
a
to
pup.
him, look him in the eye, give him one piece of advice moving forward.
You sell real estate, so own real estate. I wish I had done it a heck of a lot sooner than I did.
There you go. And as always on this episode or on this podcast, we keep track of the people who give that piece of advice for this question. It's got to be 90% of the guests who come on the show say they wish they got started sooner. So if you're listening to this episode and you have not got started, take the advice from Mark and all the others who've come on here and say they wish they got started sooner and go get a deal done. Just get a deal done. Doesn't have to be anything, doesn't have to be a slam dunk. Just get something done. You're going to have your feet in the game and you're going to be happy later in life. All right, that moves us to the next question. This is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Gainesville, Florida.
Gainesville, interesting. That I actually focused on Gainesville for a little bit, and it has some good metrics. It's also interior, and so I like Gainesville as well. What specifically about Gainesville do you like?
It's Now this is not accurate, but it's like the Austin, Texas of Florida.
Okay.
Kind of a younger demographic. It's Florida, but there's a lot of migration there, and I'm especially focused on boat and RV, and the numbers there are good on boat and RV rent, and I'm just real focused on. I got a couple of things we're circling around, and my goal is in the next quarter to nail something in that market.
Perfect. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, many times something will go wrong. But that is a blessing in disguise, because when something goes wrong, we get to learn a lesson. So what was a deal that went a little sideways for you, and what was the lesson you pulled from it?
Um, so as as much as I've consulted people, read, talked, advised people as a broker and as a partner, I got emotionally attached to doing a deal that I should not have done because it was easy to get in, and I should never have done that deal, and I had to pivot. I thought I was smart enough. I thought I knew more than the market. I thought I could make this deal work because of who I am and what I know. And it was if I was working with somebody in another market, I would have told them not to do that deal. So my ego got in the way, and it was a deal I should not have done. And I learned it the hard way. And
That is that's a lesson I feel every seasoned investor has got to learn, then learn the hard way, because it's just so hard, especially when you're in a deal drought, when you haven't really closed a deal in a while and you're really itching to get something done. It is difficult to be impact or to not have your emotions run your due diligence, run your analysis.
exactly.
And especially when you put a lot of due diligence into a property, and you've already got a lot of effort in there, and you just want to close. It's hard not to close. And so that is a lesson I've learned myself. It's a lesson you've learned. And so everybody out there, if you're listening, take your emotions out of it. If it's not a deal, it's not a deal. There's nothing you can do to change that, and just stick to your criteria. It's a lesson that I hope I've only have to learn once, but you never know, because emotions are a tricky thing there. That leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
So I have a website called Creating Wealth Through Self Storage. It's designed for the small investor. A lot of free training on there, and it also has some of the resources that I offer the small investor. And if you reach out to me, what I do, I have a limited number of slots, but I do provide one-on-one coaching, and I have small groups where we do training together. And then once or twice a year, I run a virtual online self-storage boot camp where I basically train a small investor on how to get in. Also, you can email me if you have any questions at mark@helmproperties.com. My goal is to help smaller people like us get into business, change my life.
All right, perfect. I will put that link in the show notes. So if you guys want to reach out to Mark, all you got to do is click that little more in the description. It'll pull down that full description. In there, you can find Mark's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Great being with you, Gabriel. Think a lot of your podcast. Really, you've done a good job. Thank you.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, all I ask is you leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.